In the past year or so, we've heard so much about the potential for a crash, and we've looked at many investors who believe that this is an absolute possibility. Well, in this one, we're going to be looking at an investor which many of you may know. This guy is called Chamath, and he believes that what we're going to be seeing in the future is a global issue, a global recession. Let's have a look at what he believes and why he thinks this is the case. And we're going to start off, as always, with a quick introduction as to who he is. Well, Chamath is a Sri Lankan-born Canadian and American venture capitalist. He's an engineer, he's a SPAC sponsor, a founder and CEO of Social Capital. Now, he was also an early senior executive at Facebook, working with the company from 2007 to 2011. Now, Chamath now joins a number of well-esteemed investors and professionals in his belief that the markets have been rallying for too long, there has been too much assistance, and soon we're going to see the effects of all of this quantitative easing and similar government measures to ease things up. And he thinks that the recession this time is going to come in two phases. We're going to look at both of these phases in a moment, but the two phases, simply put, are a supply side recession and also a demand side recession. He believes it's going to come in that order, and it will be of a great magnitude. Let's have a look at some of his beliefs. So a few of his major opinions are these. We haven't seen an era without quantitative easing since the '08 crash. This has distorted the value of assets and allowed for perfect bubbles to be created. And the task now is to work out what the true value of assets should be and what we should actually do to allow that to happen. And the data is currently very volatile. So as you guys will know, we have seen a lot of money printing, and we've seen all of these measures which have been taken to help stimulate the economy. But as we've looked at before, this is not necessarily a good thing long term. It has the potential to devalue money, and it isn't just a quick solution to solve all of our problems. And I think Chamath is just acknowledging how all of the support has now created a point where we've seen one of the biggest bull runs in history. If you just look on the charts of the markets from about 2010 to 2022, we've seen some massive spikes in that time period. We've seen a massive amount of growth. And again, this is all due to the assistance that we have seen from the Fed, from the government. So now, where do we go from here? And what is the true value of assets? It's a very good question. Well, let's have a look at what the data has shown us first. The last 8 quarters has shown us some very turbulent data, and it's been very, very hard to predict because it has been all over the place. We are now trying to figure out how many quarters it takes for us to get back to normal and a way that we can gauge a steady rate of growth. Now, Chamath thinks we shouldn't look at 1 or 2 months worth of data to gauge this, as it is just too soon. We should have a look at what we're seeing in real terms, as in what we've seen in the past few weeks, in the past few months, but also in the past few years. Let's look at the long-term history to get a bit more of an important and wide scope as to what is happening and what has happened. And I do agree with this view from Chamath. Now, Chamath's views also involve a 2-step recession, as we have said. He believes that it's going to happen in 2 phases. He anticipates a supply-side recession and a demand-side recession. He believes that we are currently witnessing the supply-side recession, and the current inflation is due to the extra money being supplied into the economy through government measures, along with the effects that that brings. And again, that is what a lot of people do believe. He then thinks that we're going to see a demand-side recession due to the reduced value and prospects of assets rising. So to sum this up very simply in the way that I interpreted it, I think what Chamath is simply trying to say is the supply of money, for instance, is just so large. But when we look at other things in the economy, we're seeing a supply change, if you will, from people in jobs, less people in jobs than what we have seen previously, more people on unemployment. We looked at an analyst yesterday who believes that this alone is going to hike up prices. So things like this all do affect the supply and demand levels, but really we're talking about supply first. So again, the major one I think that Chamath is pointing to is money and money printing and how it has devalued the currency. And then what we're going to see is the demand. Well, people are going to get a little bit annoyed because they have real terms less money to spend as inflation hits them in the pockets. And then what we're going to see is the demand decrease. Again, many analysts that we have looked at in the past have noted this. When the when the rate of inflation is extremely high, like it is right now, people have less money to spend and the demand for goods starts to back up. We looked the other day at Cathie Wood, who believes that the inventories are already starting to back up due to this, and it's going to be something which we see in the future. So Chamath somewhat coming in with a similar opinion there, and I would have to agree. It is something which we're all seeing right now, as people simply cannot afford to buy what they may want to, or once could have had the luxury of buying. Now, his other opinions include things from the government. So he notes that we're seeing a very slow reaction to the problems that we are seeing. All of the money printing and all of the lack of acknowledgement. Money printing continuously, heavily, for a very long time. Now, at the time of the pandemic and after that, we saw money printing continue. And of course, this was at a time where we just didn't need to see it at those levels. So a slow rate to turn it off is something which Chamath noted, but he also noted a slow rate to turn on quantitative tightening. We saw quantitative easing go on too long, we've seen quantitative tightening go on for not long enough. You see how this then causes a problem that is not due to where we are, but due to the lack of acknowledgement. If these things were acknowledged in the right time, we would be in a much better place, and that is something which Chamath also highlights. Now, what he also notes is quantitative easing, like I said, went on for way too long, way too much money was printed, and of course that has devalued the economy. Now, one thing that we've seen as well is the current price of some assets has risen very significantly, whilst others have fallen very aggressively, and this is also due to the measures that we have seen in his beliefs from the governments, from the feds, to keep things at extreme levels. Again, it's caused some assets which maybe shouldn't have to rise significantly, and some that should have perhaps to also fall. So it's caused a very volatile and divided state in the markets as of current. Now, he believes that the Fed continuously push the problem down the road, whereas what we should actually do is face the problem right now. And it is a very hard question to ask, because on the one hand, people just don't want to pay for it right now. Now, Powell did say we may have to expect some pain just to keep the thing under management, but really to cut the actual problem out, it would take a lot of pain. It would take a big real terms income decrease, and that would hurt everybody's pockets as inflation was to rip. Now, moving on to the summary of what we're seeing over here. So what we're seeing with Chamath and his beliefs, he says that because we have seen the economy propped up by policy for numerous years, we are seeing processes like quantitative tightening being brought in, which are hopefully going to bring things back to normal levels and allow us to see what assets are actually worth. But like I said, the main question which I am asking personally is how are they going to do this and what are they going to do? Again, and how heavily are they going to go? Because it all does matter. Overall, though, it is going to be very interesting to see how this plays out and how they do take care of this problem. And what do you guys think? What do you think that they should do, and what do you think is the best way to go? Do you agree with Chamath and his opinions? I want to hear your beliefs down below, so thank you so much for watching till the end. I will, of course, as usual, see you in the next one.